A big interest rate announcement is coming up at 2 p.m. today. All eyes await whether Fed Chair Jerome Powell will stay the course, keeping rates unchanged in the range of 4.25 to 4.5 for a fifth consecutive meeting, or will he change course and cave into pressure from President Trump to lower the interest rates? Joining us now to discuss is Thomas Savidge. He's a research fellow with the American Institute for Economic Research, as well as an economic public policy analyst. Thanks for joining us, Thomas. Trump has repeatedly pressed Powell to lower the interest rates, but Powell has warned a premature cut would have negative effects. It would worsen inflation, which he says will ultimately raise the borrowing cost. What are your expectations for today's 2 p.m. announcement?
Well, signs seem to point to them holding rates steady again this meeting. But one thing that is interesting is that there are possibilities of other board members, which, of course, that Federal Open Market Commission has numerous members on there. You might see multiple dissenting votes, which we haven't seen, I believe, for at least the past 30 years. And that really is, that's really interesting. And the debate there really seems to be over tariffs and the uncertainty that tariffs or these potential trade deals, which are kind of hanging in the balance, will impact the economy, which is why, although many on the FOMC, the Federal Open Market Commission, want to hold rates steady, but you have some growing dissent and at least a desire to prudently cut rates.
That's very interesting. I always presume that it was the Fed chair who makes the announcement and kind of acts autonomously. But what you're saying is they discuss it behind closed doors. They met yesterday, and of course they're meeting again right now, or they will be this morning before the 2 p.m. announcement. So if that hasn't happened in 30 years, what happened 30 years ago, and what would happen if there's not a unanimous vote?
What happened 30 years ago is there were many members appointed to that committee under President Reagan who disagreed with then Fed Chair Paul Volcker, who was appointed prior to President Reagan coming on. And but from there, the Fed had kind of worked towards building a consensus. And I think while there's some healthy disagreement, there's definitely healthy disagreement there. I don't think we'll see a split vote today. I think likely that, even with we'd see maybe 1-2 dissenting votes. Generally, the trend seems to be to hold and wait and see.
And obviously, if they were lowered, that would make getting a mortgage cheaper, which means maybe potentially there'd be more buyers, which would mean more people would sell and the housing market would flow a little bit more. But outside of just a mortgage, what other impacts are there on if we lower or higher interest rates, by a quarter point, for example?
Well, one thing's important to clarify is that the Fed doesn't set interest rates for the entire economy. That Federal Open Market Commission sets the federal funds rate, which sets the interest rates which depositors at the Federal Reserve, so think of the Fed as a bank for the bankers, they set the interest rate at which these entities that have deposits at the Fed lend to each other overnight. And that impacts market interest rates the same way when you throw a stone into a pond and there's a ripple effect. When the FOMC changes that interest rate, that benchmark rate, it ripples across the economy. But what we'll likely end up seeing is, in addition to mortgage rates, we might see credit card rates going down. But again, as you mentioned earlier, if we're cutting rates too much and too fast, we may end up seeing above average inflation again.
And clearly, the tariffs can't be just put aside. Everything is sort of interdependent. If the interest rates go down a little bit, potentially it offsets rising automobile costs, and auto loans are a big part of sort of the loan industry. So does the breakthrough on the EU trade deal in any way calm the inflationary concerns?
Oh, definitely. At least in the sense that there is some certainty there now. The one thing that was kind of the worst part of the situation of these ongoing negotiations, of this constant wait and see, the deadlines getting pushed back, is the uncertainty. Small business owners, employers, every part of the economy, whether they're purchasing or whether they're looking to invest, it's really was kind of a wait and see because they didn't know how these deals would play out. And really, it's that uncertainty that kind of left people standing still and really wondering what they were doing, at least when these trade deals are coming through, and hopefully more come through in the next couple of weeks and the next month. That reduces uncertainty, because when you have that officially announced, you can at least have some understanding of what's going to happen and how to plan around it.
And as we finish up, Thomas, I just want to get your reaction to President Trump's comments while in Scotland. He said each point of interest was worth billions of dollars in the economy. What do you think would happen if there is a movement downward at the right time? Like, how quickly does that then spur job growth and all the other things that power the economy positively?
Well, yeah, I think the key word there you mentioned in your question is at the right time, and that's always extremely difficult for the Fed to land, especially when they have so much discretion. That's also the danger too, is that if rates are cut too much, that will end up costing billions of dollars, because you'll see above average inflation again, and that's just the general the purchasing power of your dollar. How far your dollar is going to go, that's going to shrink. But yeah, it is extremely important, because the Fed, while it doesn't set, as I mentioned before, it doesn't set every single interest rate in the economy, it has a lot of influence. And so there really is a lot hanging in the balance there, even if they decide to take no action, which is a kind of an action in and of itself. If they decide to hold rates steady, which is what we're likely to see, that could have a huge impact across, pretty much every sector of the economy.
Well, if nothing else, it's been entertaining to watch the president and Jerome Powell wearing hard hats last week, and we'll be watching with great interest what happens at 2 p.m. Thanks, Thomas Savidge, for joining us today.